And in the Nigerian equities market, we have seen that it sustained its positive momentum as investors continue to show interest in large cap companies. However, analysts at EDC Securities say they expect the market to remain volatile as the uptrend in yields in the fixed income market space and uncertainty in the macroeconomic environment may keep investors' interest abated. Olamofe Mathew, an analyst at EDC Securities, joins us now for a conversation. Olamofe, it's a pleasure to have you on the program today. So maybe you can start by just articulating for us your concerns about where the market may be headed in the short term. We are seeing some upside momentum at the moment, but I do believe that you have some concerns, and we could see that upside momentum wane a little bit.
Yes, so thank you very much. The equities market currently is at a year-to-date gain of about 2.66%. We've seen investors key into names that have strong fundamentals and then attractive dividend yields. Some of those names are key banking names like the GTCO, Zenith Bank, and the rest. But today, the market closed negative at minus 0.17%, and that was largely due to sell-offs in Dangote Cement and Airtel. What we see in the near term is, of course, like you already mentioned, we see a volatile market in the near term. Although investors currently are favoring investment in the equities market, picking up some attractive names, names with attractive dividend yields, because currently we're seeing some sort of pressure in the fixed income space. I mean, particularly if you look at the last NTB auction, so that yields and stock was actually moderated significantly, and the ripple impact is actually felt in the secondary fixed income markets. But some of the things we also need to bear in mind is that we are heading towards election, and election coming as soon as February, likely call for caution for some investors who also want to see how it pans out, particularly how post-election events will turn out to be. We believe this will actually take the tone in the equities market in the near term. But as it is now, investors are they're largely tilted to key names that have attractive dividend yields and strong fundamentals, and you've seen that impact really with banking names like GTCO and Zenith. All
right, so a big focus on companies that will provide attractive dividend yields. But let's talk a bit about the elections and the impact that is having on investor sentiment. What's your view on the build-up to this election compared to prior elections in terms of how investors are investing ahead of the outcomes? What's your take on the sentiment? Is there caution, or is there a sense that, for example, that there are investors out there that think that the elections are just simply one of those things that have to happen this year, and then it's business as usual?
Okay, so to be fair, I don't think investors actually expect so much of post-election violence. What we'll probably see is investors are kind of just buying in names that have attractive dividends. But you agree with me that even though as we approach the elections, what you typically see in a period like this is foreign portfolio investors selling down the market and deepening performance. But we haven't seen so much of that because participation from foreign portfolio investors in the market is quite thin at the moment. We've seen a lot of sell-offs. Investors FPI is taking out their funds in the market because leading up to the election. So that's why we do not expect to see so much of a dip as it were. And some of the things we also have to bear in mind is that PFA is actually long. And so a PFA who is looking beyond the election period, is having a long-term fund to play with, will see an opportunity to buy into those names, buy those dips, and that itself keeps the market afloat. And so for us at EDC, what we see in the near term, particularly for H1, is a market performance at worst flat to slightly positive, because we know that local investors have actually been the major participants in the Nigerian equity space, right? And potential sellers from foreigners will actually not really deepen the market as such, but it only presents opportunities for these locals to buy, particularly if to buy the dip, and then be able to make more attractive returns by year, particularly regarding dividend yields. So that's what we see.